I remember like not failing on purpose, but I remember like not wanting to be in certain classes with like the smart, sneaky people because of the fact that none of my friends were in those classes, or my desire to get involved in some sort of business, whether it was selling, buying sweets and kind of bringing them to school and selling them, or whatever it was, right? I remember I'll do things like go to sample sales, buy like, I think at that time it was like True Religion and Avisu.
Yeah.
I'm quite an optimistic person. So even if it looks quite difficult or like it's not going to happen, I believed if I worked hard enough, I could make something happen. And that led me to say, do you know what, actually, I don't think I'm going to go uni. Someone came, they came with a knife, they pulled out a knife, and then the people who ran the skating rink saw it and they were scared for their lives. So they ended up saying, I think we went to like, what was it, Weatherspoons, and he went on a rant about how much money he had made and all that stuff, and he bought all of us drinks. And I started asking him, like, how can I get involved? At the time we were doing like quite small loans. So you're talking about like loans that were about maybe 50,000, 100,000. I think 100,000 was our average size loan. So some of our fundraisers now are like, when I'm looking at some of the syndications, you're looking at like 1.5 million.
You're not defined by where you come from.
Yeah.
And I think that's a big message that I always want to tell people.
Like you have to be able to be uncomfortable.
Yeah.
Like be comfortable with being uncomfortable.
When you grow up in ends, you don't realise it when you're confident, but you have an audacity to do things that ordinarily most people wouldn't be willing to do.
Welcome to the Takeover Experience. We have a special guest in the building. Demi, how are you doing today?
Good.
Yeah?
Hungry.
Yeah, don't worry. We're not going to keep you too long. So how have things been with Lendoe today?
Good. I mean, today on like generally, like, I mean, generally things have been good. There's a lot on. We're having our event in the next month. We're really pushing to see how we can kind of take things to the next level.
Yeah.
When I say take things to the next level, I'm talking about kind of how do we expand, how do we kind of grow our different services and products that we offer.
Yeah.
Really kind of trying to change. I wouldn't say we're changing the customer that we're changing the customer we serve. I would say more so the customer we serve is changing, right? And that means they're growing. And as we're trying to grow with them, we're facing growing pains, if that makes sense. So things are good but busy, and at the same time sometimes very painful. When you find yourself in situations where maybe we've got a really good customer you want to do something with, or you want to work with in some way, shape or form, but you can't because capacity wise you're not growing as fast as them. So there's all these ups and downs.
That's actually an issue.
Yeah, well,
Wow,
I wouldn't say it's like I guess it's a good issue to have, right?
Yeah.
So right now, we've always been a very, I wouldn't say traditional company, but we've never seen like fundraising as a must. Right.
Okay.
Because we've always said that, don't get me wrong, we'll fundraise if we have to, but we want to organically grow.
Yeah.
And then be forced to fundraise based on the growth of our clients.
Yeah.
And I think that's what's happening now. So we're looking at, all right, if our clients are growing, 5x, 10x way faster than we are, the only way to keep them is for us to grow 5x, 10x. And that often means, going out, raising capital, deploying that capital, increasing your capacity, and then offering new services to ensure those customers stay happy. But obviously kind of going through that whole iteration, going through that whole process, shall I say, isn't always the easiest process to go through.
Yeah. Wow. Okay,
Yeah.
we're gonna definitely go back there, but we want to get to know who Demi is. Who is Demi?
Brother, son, boyfriend, nephew, founder, director, friend. So yeah, I am a whole bunch of people to different people, right?
Okay.
But I guess, at my core, I'm someone who's, I would probably say, extremely ambitious, probably too ambitious.
Okay. Cool.
I won't say too ambitious, but yeah, I'm quite ambitious. And I think that's because I'm very optimistic. I'm a believer, strong believer. So I guess that's where it comes from. I am friendly.
Okay.
I would like to think.
You're coming across friendly right now.
I'm friendly. Social.
Yeah.
Deliberate. Focused
Mm-hmm.
at this current point in time.
Yeah. And then you lose it at times. Right?
Yeah,
it's normal, right? You can't be like 100% focused all the time.
Exactly.
Right?
And I think it helps when you're not 100% focused all the time. I think it helps when you're, focused for not short periods of time, but a particular period of time, and then you kind of let loose a little bit, because it gets you back in that mode of focus, saying, okay, I've had enough fun now. It's time to focus again. So I would say right now I'm very focused, particularly like in the run up to the event and what our plans are for this year. I'm Demi, right? I mean, a lot of people know me as the guy to go to if you want something, if you need something done.
If you need something,
the middleman. Yeah.
Love that. So let's talk about your story. Whereabouts are your parents from?
My mum, both my mum and my dad are from Nigeria.
Okay, cool.
Different tribes. Mum Oyo, dad Ijebu.
Okay, I've never heard of those tribes.
Yeah.
Hey,
yeah. So both, quite different people. But I mean, I grew up here. So they're first generation migrants. They came to the UK, set up shop, had me, had my sister, Bob's your uncle. And then obviously I kind of grew up not only with them, but also family and friends, cousins, family and friends. So when I was young, I was often around older people.
Okay.
So often with my bigger cousins. But yeah, parents are from Nigeria. I'm not going to that until you ask me about it. But yeah.
Okay. Oh, mad. Have you been back to Nigeria? You go often?
Yeah. I go quite often. Yeah.
You're the first person that I've heard that say, I'll go often.
Is it?
Yeah.
Do you know what? Actually, I don't
not doing it.
do you know what? Actually, I don't actually go often. So this time last year and the year prior, I was going often. Last year, I was in like focus mode.
Okay.
So I only went once.
Okay.
All right.
Only went once, like in the year?
Yeah.
Oh, come on.
But there was a time where I would go. There was a time where I'll go to Nigeria like 3 times a year.
Wow.
Honestly, yeah.
Wow.
So I go quite often. I mean, Nigeria is my second home. I see Nigeria as a place where eventually, hopefully, one day I'll be able to, set up shop.
Yeah.
And be here. So yeah.
That's amazing. Yeah, that's the plan.
Yeah. How about you? Do you go back to your place often? No.
No.
Ghana, right? You're from Ghana, right?
No, Nigeria. Everybody thinks Ghana because of
Is
the
it?
name. Ato.
Yeah, Ato. Yeah, from Nigeria.
Yeah. So my dad's. Oh my god, how am I gonna forget? My dad's Ijaw. My mom's Igbo.
Okay,
my mom's like Igbo and Sierra Leonean. Yeah,
Okay,
so
cool.
I kind of rep like both Nigeria and Sierra Leone. Yeah, but Nigeria. The last time I went was 2021 now, end of 2021. So it's something that I'm trying to.
Okay. Was you in Port Harcourt or
when we went that time?
Like when you went,
No, Abuja.
Abuja. Okay.
Yeah,
Abuja,
we went for
okay.
a wedding. Yeah, went to Abuja.
Yeah.
And that was my first time going to Abuja. I've never actually been to Port Harcourt. I've never been. I've never actually been to my dad's place there.
Is it interesting?
Yeah. So I need to do that. But I've been to Lagos, been to Abuja now. Yeah, want to do all of it.
Same. I've been to Abuja, but I want to go Abuja more often because I feel like Abuja's the next up.
It's the next one that's up.
Yeah,
like you can see like where it's going.
Yeah,
so,
definitely. When I was there, you can see the infrastructure's in place. It's a lot more calm than Lagos, but you've got that London vibe to some degree.
Yeah, that's what people say. To be fair. Okay, so you grew up in London. Whereabouts in London? You say was it?
So, like I mentioned, I originally started my life in Leytonstone.
Okay.
Actually, Finsbury Park, and then I moved to Leytonstone with my mum and my dad and my sister, and then we ended up moving to Islington, like Hoxton. Well, it's Islington, Hackney, it's like at Hoxton Angel area. And then I started growing up. I grew up there. So I learned to ride my first bike. The usual like kind of growing up as a child. But then I started living with my cousins, and I had 2 sets of cousins that I would live with. One was my cousin out in Hackney, Homerton. That was Kingsmead, and the other was my cousin in Holloway. So it was quite weird. So I kind of like had multiple homes, if that makes sense. But I would say the majority of my life, I was probably in Islington, Hoxton.
Okay.
And then after that, I'll say Hackney.
Yeah. What's it like that? Because they're 2 different complete areas, they're different areas. So
very
like
different areas.
Those,
I think when I was at home with my mum and my dad, in like the Islington, Hackney, Hoxton, Angel area, it was cool. It was a really good area. I mean, it wasn't actually when I think about it now. It's a good area now, but then I never forget. Bad. It was bad. I don't forget one time like we came home and someone like, I guess it was due to racism. That's not my mum's fault, but someone smashed my mum's windows. She bought a new car and they smashed the windows, and then my dad went down.
Wow, man.
My dad was like, yeah, I spoke to them. They're not going to touch a car anymore. Kind of like pay someone off. But I mean, other than that, like it was pretty cool in Islington. Like, you know, I went to school not too far from there. But then when I moved to Hackney, it was also cool, but it was different. It was a lot more community based. I feel like when I was in at my mum's, it was very much me, myself, and I kind of thing.
Okay.
But I think when I moved to Kingsmead, it was very community based.
Yeah.
Like everyone in the estate knew each other. Like, we'll leave our front door open.
Yeah.
That kind of community based.
Okay.
Like everyone just knew each other, right?
Wow.
And then when I moved to like Holloway, when I was a little bit older with my cousin, again it was, you know, still quite community based in the sense that, you know, we would always, like, my cousin was obviously older than me, so we would always do things with him and his friends, but they was always doing things together. So there was kind of like a I wouldn't say a crew, but there was a bunch of us that we always done things together, right? But when I was at my mum's, I didn't have that same community per se. Yeah, and I don't know what it was. Maybe because, so it was weird, right? My house was literally on the borderline of Hackney and Islington. Yeah. And I still think maybe it was because at the time, obviously, I'm in Islington, which is, whether I like it or not, predominantly it's prominently, well, it's predominantly white people I'm living with, right? And maybe because I just didn't feel like I could build strong bonds with those people, I didn't kind of get to know everyone in the area. But when I started like walking across the bridge and going to Hoxton, I started to notice that there was more people like this. Sounds crazy, right? Because
I mean, does it?
It's literally a road that separated Islington and Hoxton, but I just saw more black people on the other side, and I started realizing that I was building more bonds with people that kind of lived across the road from me. So it was quite weird. I mean, I did end up building bonds with people around my mum's house that happened to be Caucasian, but it wasn't natural. It wasn't as natural as the bonds that I built when I was in Kingsmead, or the bonds that I built when I was in Holloway, or the bonds that I built when I kind of went across the road. And
that's interesting.
And played that with the other lot. Yeah, it's interesting. I guess you know, it shows you, like, you know, as you grow up as a child, you just need to be, you know, well, once you have your child, you need to be mindful to kind of teach your child that don't just mingle with people that look like you. Mingle with everyone.
Have a bit of diversity.
You know, have a bit of diversity, because you never know, like, the experiences that I missed out on because I felt like I shouldn't talk to him. He's
that's interesting. Why do you think that is? Because I don't feel like what you were saying was like it was deliberate.
Yes, exactly. Right. It wasn't deliberate. I mean, it wasn't deliberate at all. I mean, as I got older and I realized, you know what, you want to meet everyone, you want to speak to everyone, you want to experience things with everyone. You know, I became a lot more, you know, open to talk to anyone. But I think when I was young, I guess you naturally just draw to people that remind you of yourself. And it doesn't mean that, like I said to you, as I started to get older, you know, I did start to mingle with some of the boys around my mum's area. But if I look back at it, it was never as, you know, it was never to the same level that I mingled with the boys across the road, or like the boys in Kingsmead or the boys in Holloway. It was never that same way.
That's interesting.
Yeah, and it's when I look back at it, it's funny actually. But I definitely think it's a thing of, you know, you just being drawn to people that look like you and that have similar experiences to you. And then obviously when I was in Kingsmead, I was with my older cousins, and they already had friends who had little brothers or little sisters. And then when I was in Holloway, I was with my older cousin, and he already had friends. So maybe that had a part to play.
That was making
maybe that had a part to play in it as well.
Wow, that's crazy. And school wise, what were you like at school? Was you into school?
Because I was a tyrant, man. I was a tyrant. I mean, I wasn't as bad as some of my friends. I wasn't as bad as some of my friends, but school. I mean, I guess you know what, I'm a quick learner. Put it that way. Well, I like to think that anyway. Maybe as I got older, I've got a bit slower. But when I was young, I was a quick learner. So when I first got into secondary school, I'm talking about now, you know, very early on, I was in like all the extracurriculum activity classes. So like I was doing Latin. I was like basically all of the classes that was for the smart people. I was in those classes, but the problem was that I was also very social. So I also wanted to be with the cool guys. You know, I wanted to be with the cool girls. I wanted to mingle. I wanted to, because I'm a social person, right? And I think, you know, over time that started to influence, you know, how I was performing. Started to influence. I remember like not failing on purpose, but I remember like not wanting to be in certain classes with like the smart, sneaky people because of the fact that none of my friends were in those classes. You know, because I mean in school they made being smart seem like it was a bad thing.
I know.
Or you know, being
it's not cool,
you know,
right?
You know, being capable like it was a bad thing, but it wasn't. You know, and I wish I probably focused a little bit more.
Yeah. That narrative is so interesting. That narrative is so interesting because it's so funny. We all look back and think, actually, right now, being smart is cool. If you're smart, that's like, everybody loves it. Like, if you're smart, like, oh, my man is smart.
It's attractive.
Yeah, now it's attractive. Back then,
it's attractive. I mean, like, and I'm not even talking about from like a physical perspective only. Like, I'm talking about like, when you're smart and you have like interesting conversations, people are attracted to you. Yeah, they want to talk to you. They want to conversate with you. They want to find out a bit more about you. Yeah, and I just wish that there was more representation when we were younger.
Yeah, of that you can be smart, but there's different types of smart people, right? It's not one type of person. You know this person's smart, so that means they're a dork. They like
exactly. You know what I mean? Like, they wear big glasses, even though I wear big glasses. They wear glasses, but yeah, no, it's the truth. And I always think. And I've got a little sister, and I always say to her, "You're so lucky because your generation got to see us." Yeah, do you see what I'm saying? Yeah, your generation got to you got the cheat code because we went before you and realized, hold on a minute, this is how the game is played. Yeah, at those levels anyway, and we could give that to you. But I wish there was more representation.
Yeah, wow, that's amazing. So, what did he end up finishing school with? Was it get bare GCSEs? Or no? Do you remember?
Yeah, I remember. You know what? I got a good grade in maths.
Okay,
I'm not going to say the grades.
Okay, you don't have to say the grades.
The grades are relative, right? Yeah. But I would say this: I got a good grade in maths.
Yeah.
I didn't, and I got a decent grade in English, and other than that, it was just like decent. Okay. It wasn't failures, but it wasn't like I've got some friends
let the standard level.
Yes, I've got some friends like, and these are people that I met after, like when I started to go to university and so on and so forth. And they're like, "Yeah, I got 12 A's," and I'm like,
"Wow,
I got like 6 A stars, 6 A's." I'm like, "What the heck was you learning?" Do you know what I mean? But it just shows you, like, I went to a school called Hybrid Grove. My school was so bad; it was actually on it was on one of those what were they called? Those secret programs where someone comes into a school, and they disguise as a teacher, but they're filming classes.
Wow,
My school was bad. My school was bad.
Gosh,
but I managed to get through.
I
managed to get through. I managed to get through. Yeah.
Wow.
Yeah. Wow. So I'm in public school. I didn't even know there's no private school over here. I'm in public school.
Do you think you would do it again? Not knowing. Would you send yourself back to that school?
It's a really interesting question because now I'm a lot older. I have friends that have gone private school, and I see the advantages, and I see the way that they think. They just naturally think different, right? They're much more optimistic. But anyway, that's another story. But would I do it again? I probably would for a few years.
Okay.
Because I feel like going to public school also taught me skills that a lot of my friends that went to private school don't have. And those are skills that I've continued to use throughout my life.
Yeah.
I think my sales career started in school.
Okay.
In public school. I'm not going to say how, but
I think we can imagine.
My ability to or my desire to get involved in some sort of business, whether it was selling, buying sweets and kind of bringing them to school and selling them, or whatever it was, right? I remember I'll do things like go to sample sales, buy like, I think at that time it was like True Religion and a Visu, and then bring it to school and then sell it to my friends, and that I won't tell them it was a sample sale, and I've just made God knows how much. But like all of those things, they started in school, and I think if I was in a private school, I don't think I would have been thinking in that way. I think I probably would have been thinking another way. Maybe I'll be doing, I would have been selling. I don't know what I would have been selling. You know? But
that's interesting.
But I feel like going to public school helped me in that way. It helped me to become, I wouldn't say an entrepreneur in itself, but to get that entrepreneurial flair.
Yeah.
And to kind of learn grit.
Yeah.
To learn how to stick it out. To learn how to save. To learn. There's all these different things that you learn.
It's important.
In school that benefit us as we get older. So yeah, no, I would say I'd probably try to do three years in public, and then two or three in private.
Yeah, it's important. I have this kind of theory that I feel like no matter what kind of situation you put some people in, they're just gonna always get through. Yeah, they might be like different versions of them. Yeah, but I feel like they're always gonna get to where they need to get to. Yeah, I mean, there's just certain personalities. I think that can. No matter where you put them, provided they're safe, right? Because let's be real, some schools are mad.
Yeah,
provided they're safe, I feel like they're gonna get to.
It's really interesting you say that, because I mean, I believe the same.
Yeah,
And I believe also that there's certain types of people that they just kind of get things done, you know, in any environment, in every environment, whether it's corporate, whether it's, you know, the ends, shall I say, they just get things done and they find a way to make things happen.
Yeah.
You know? Yeah, rainmakers.
Yeah, exactly. Exactly. So you ended up, so you mentioned that you went to uni. What did you decide to study?
The uni story is a really interesting story, you know. So I studied marketing in uni, right?
All right.
But that, like, my whole journey into uni was quite a weird one in the sense that I was meant to go to University of Essex. So I got into do money, banking and finance. And at the time I was also playing football.
Yeah.
And I was really passionate about football at the time. And for some odd reason, it wasn't for some odd reason. I mean, look, I thought I was going to, you know, make it, right? I thought I was going to, like every other kind of young 17, 16, 18-year-old, I thought I was going to get somewhere doing football. And at the time I was playing semi-pro, I had been like kind of playing games and been scouted a few times.
Yeah.
I was meant to kind of go down to Southend.
Yeah.
And this was like, this was probably when I was like 17, I think. So I would have been like a second year scholar or 16, 17. But for some reason, you know, it never happened. I think now it's probably a good thing it didn't happen because I wouldn't have. Anyway, it's another story. But yeah, Southend thing didn't happen. But I still felt like the football thing was going to happen. So I started playing semi-pro. I was playing for a club called Wingate in Finchley at the time. And then, you know, it was like, do you go to uni and leave this club, that semi-pro, and that, you know, you're training with what was at the time the first team, even though you're not in the first team, you're training with them. You know, I'm quite an optimistic person. So even if it looks quite difficult or like it's not going to happen, I believed if I worked hard enough, I could make something happen. And that led me to say, do you know what, actually, I don't think I'm going to go uni. So I ended up calling Essex and saying, you know what, I don't want the place. And then getting a wake-up call from my mum and my dad at the time.
Wow.
I don't know about telling them. I just told them I'm not going uni, right? So yeah,
that's a mistake.
It just didn't work out. So anyway, long and short, I had to go through clearing to university. But I was like, okay, let me find a university that's not too far from my club. And at the time, the club was in Highgate, and I realized that Hertfordshire wasn't too far. It was like, what, a 30, 45-minute drive.
Yeah.
So I said, all right, let me try University of Hertfordshire. And I was like, okay, do you have any like finance or like kind of, I wouldn't say analytical courses or kind of, what would you call them? Marketing, finance. I don't know what you would call them, but I was just like, look, I want to study something around finance, right? Because that's what I was meant to do. Or something around economics.
Yeah.
And they was like, no, all we've got is like sports, PE, and marketing. And I was like, marketing? And I was like, do you know what, actually, let me just try marketing. And I just done it.
Wow.
But at the time, I didn't realize how big marketing was going to become. Because this was before social media. This was before digital marketing became a thing. So I was kind of going to Hertfordshire and studying marketing for 3 years and coming out of Hertfordshire and then just seeing the rise of digital media, social media, all of these different forms of marketing that kind of arose after, you know, I kind of graduated was really interesting because I wouldn't say I was at the forefront of those different waves, but I kind of knew they were coming because of my 3 years. But yeah, so long and short, I studied marketing.
Okay. Wow.
Yeah.
Wow, that's interesting.
Yeah.
That's interesting.
Yeah. I mean, whilst I studied, I still done like things in finance because I was very involved and very interested in finance. But my major was marketing.
Wow.
Yeah.
So marketing and then trying to accomplish it to be a footballer.
So I mean, by the time I got into the first year of uni, man, this just wasn't gonna happen.
It was just like, that's it. Like
my knee was good. Like, well, supposedly my knee was gone, but yeah, I just wasn't the same person. You know, was I good enough? Probably not.
Yeah.
Right. And it just didn't happen. So by the time I got into, I think it was like towards the end of uni, end of the first year, I realized that actually I got to sit down, fix up, and like actually start studying, right, and start taking this stuff in. So I did, and you know, uni went relatively well.
Yeah.
Started businesses in uni, met some of my lifelong friends in uni. Uni was good, man.
Okay, so you started Lendoe in uni, was it?
I didn't start Lendoe in uni, but I did
something else.
But I started an event called Skate Skank with a good friend of mine.
Okay.
And this event was big.
Okay.
This event was big. Like
the ones that were happening in Vauxhall.
So it was like that. Our whole thing was we wanted to come to Vauxhall eventually, but we was in Hertfordshire. So what we'd do is we would rent out a skating rink in Welwyn Garden City, and we would basically kind of put on like a skate event. But the thing about this rink, this venue, was that it was perfect for skating, and there weren't many venues like that. So it was like the Vauxhall venue that was purpose built for skating. It was called I think it was called Roller City. I think it was. Okay. But what was crazy is that the first one we done, like it was different in the sense that no one had done a skating event. Everyone was doing raves.
Okay.
Everyone was doing house parties or some sort of party, right? We were doing like a skating event. Like the lights didn't turn off. You could see everyone's faces. Like I think that because it was different, people were attracted to it. And we really thought about it. Like we done questionnaires in the library before we launched it. Me and my friend, we put a lot of work into it, but it succeeded. Like I think the first event we kind of we made quite a bit of money, but the second one I'll never forget. Like we made profit before we even had done. We made so much money, right? At the time, it's relative now, but at the time we made so much money that we had basically made profit for ourselves, and we had broken even, made profit for ourselves to go and like mess around before selling tickets on the day.
Okay. Wow.
That's how much demand there was.
Wow.
And I guess that demand was there because it was different. So we ended up hiring coaches. Coaches were coaches, like,
oh my God.
like coaches or students
wow.
would come to this place to come and do this skating event. So it was mad. When I think about it now, when I look back, it was mad. And I always talk to my friend like we should probably try to do something again. But
what happened? Why did you stop?
We had I think it was my birthday. It was my birthday. It was actually my birthday. So we used to do these events. I think it was every 2 months, and this one fell on my birthday. So it was my birthday party at Skate Skank. And someone came. They came with a knife. They pulled out a knife, and then the people who ran the skating rink saw it, and they were scared for their lives. So they ended up saying, "You know what? We don't think you've got the right crowd. You're the right fit, so on and so forth." So yeah, it was sad. It was sad,
your fault.
For me now, when I look back at it, I think that was a test to see whether me and my friend would persevere and find another venue. And I think at that time, I was doing other things, he was doing other things. We just didn't persevere.
Yeah.
We just said, cool. Yeah. But when I look back at it now, I think we should have persevered.
Persevered, definitely. Yeah, I can see why. Yeah. Wow.
Yeah. I think when you're young, you don't realize these life skills such as like perseverance, grit. These things don't come to break you; they come to make you often.
Yeah. Wow, yeah. That's crazy. So, Lendoe, how did we get there? How did Lendoe?
So Lendoe's an interesting story. I mean, look, long and short, I've always been quite interested in finance, right? Or at least the financial market, shall I say, right? And that started way back in college. During the last recession, my economics teacher would always put up like bulletins around what was happening. So not during the last recession that we're kind of going through now. I'm doing the one before that, right?
Okay.
2008.
2008 one.
Yeah. And a friend of mine at the time, this was probably 2007, 2008. A friend of mine at the time was working at Barclays, and long and short, obviously taking in what my economics teacher was constantly putting up every time we'll have an economics class in regards to like what's the latest headline, what bank is going bust, what banks are going down, what's the stock price of all like the kind of the market. And my friend working in Barclays, my friend at the time, Bob Diamond, was running Barclays, and Barclays shares I think were trading probably at about 91p. I don't know where they'd fallen from, but they'd fallen significantly.
Okay.
And my friend as a cashier, he was still a bit older than me, but we were still quite young. He decided to buy some shares because he believed in Bob Diamond's vision for the bank. Okay. And Bob Diamond ended up striking a deal with the Saudis to save Barclays, and the share price, kind of rocketed. Wow. I think my friend got in like at 40 or 30 something p, and he told me. But anyway, long and short, after the share price rocketed, I remember he went on like, I think we went to like, what was it, Weatherspoons, and he went on a rant about how much money he had made and all that stuff, and he bought all of us drinks, and I started asking him like, how can I get involved? That's what I'm saying.
I love that.
And he told me to read this book called The Naked Trader.
Okay.
And I started reading The Naked Trader. From there I started investing via a dummy account, via Hargreaves Lansdown, and then from there I just went from one thing to another. I had family. An uncle of mine was working in the oil and gas industry, and he was very involved in stocks and shares as well. So I'd ask him for advice. And before I knew it, I was just very involved in like kind of buying and selling stocks. And that started happening at uni.
Okay.
And I think that's what led me to eventually kind of about 2004, 2013, 2014, getting involved in the retail bond market. And the retail bond market was effectively a new market that had been launched by the LSE that effectively was issuing retail bonds. So so Ladbrokes could go into the retail bond market and issue a bond at par.
And bond is just
a bond is basically a financial instrument that allows a corporate to raise capital on their balance sheet, right? In the form of debt, right? Or credit, you could say. But long and short, I went from buying stocks and shares to buying retail bonds.
Okay, cool.
And when I was buying retail bonds, the basic fundamental analysis of what retail bonds to buy was what eventually led me to doing my first private loan.
Right.
Which was under a company at the time called AH Partners, which eventually turned into Lendoe. So that's how it started.
Okay. So you learned yourself.
It was
invest in yourself personally, then invest stocks and shares, and then bonds.
Yeah.
And then you raised.
In between then there was Forex, which didn't work out very well.
Forex.
It didn't work out very well.
Forex out, man.
But long and short, when I got into retail bonds,
so
I had a mentor at the time, or someone that was teaching me anyway.
Yeah.
And he kind of taught me the basics of kind of the fundamentals, like the 5 C's of credit, like capacity, collateral, character, like just the way where you assess these companies, right? And I took that learning and eventually started doing private lending when I realized I was basically getting family and friend money to buy these retail bonds. And then I never forget, my broker told me, look, what you're doing is regulated. You can't do that. You're setting up an investment scheme, an unregulated investment scheme.
Okay.
So when I stopped buying retail bonds, I was approached by someone in my church. My church had a big role to play as well. I'll talk about that. But I was approached by someone in my church who knew I was into investing to give them, I think it was like $4,000 for their hair salon. There was a long story short, they was having a dispute with their partner. They wanted to move out of the shop they was in with not their wife partner, their business partner. They wanted him and his wife wanted to move out of that shop and set up their own place. And I ended up doing it, and that led to people realizing that Demi can provide capital. And then when my actual church got in I wouldn't say in trouble, but they got in a bit of a predicament, myself and a few other young adults in the church came together, and then we financed the building of the church. And I think that was the catalyst that really took at that time AH Partners off. Like that was the catalyst.
Yeah.
Because it was quite a substantial amount of money, which meant we raised a bit more money. It was something that was very public. So a lot of people, everyone basically knew after that. Wow. And then everyone started approaching me. And that's kind of how I realized there was a market here.
Okay.
So there's loads of different factors, but Lendoe kind of started off the back of those.
So because of what you had done for the church, and obviously your experience with what you were doing, people started saying, "Okay, we've got money to spend it."
Yeah, basically, yeah.
Wow, it's crazy, right?
Yeah.
People think people don't have money. There's money out in this world.
People have money.
Yeah.
I remember like the first few investors that we had with Lendoe, because initially we was like balance sheet lending, and we was taking capital from family and friends. But the first few family and friends, I mean, some of them, when they told me how much money they was willing to give me, I was like, "Wow, you got that much money?" He's like, "Yeah." So yeah, people have money. People have money out there, man.
That's crazy.
Don't judge a book by its cover, that's what I was saying.
Okay, so can you talk to us about how Lendoe works now, currently? Yeah.
Okay, so at the moment we're basically a platform, an access to finance platform, particularly for underestimated entrepreneurs that matches founders who are seeking finance or funding of some sort with different funding providers that are usually not in the mainstream. Yeah. So it's usually not a high street bank, it's usually an alternative finance provider. It might be a family office.
Okay.
It might be I'll say probably those two, alternative finance providers and family offices. There are others out there like private lending, PE-backed firms and stuff like that, but they usually really like large ticket sizes. We talk to these finance firms quite often, but I would say the people that really back the entrepreneurs that we're working with at the moment are alternative finance providers and a very select few family offices.
Okay, and it's is it loaning or
so it's lending? Yeah,
lending,
so it's
lending,
it's providing things such as credit lines.
Okay,
providing effectively, well, I wouldn't say providing bonds.
Yeah.
Bonds happen in a different way, but providing credit of some sort.
Okay.
Credit
Ooh,
or
okay.
access to credit.
Access credit. Why? I guess why that way instead of like investing?
It's a really good question.
Yeah.
So a lot of the founders that we work with, or let me start from the beginning, right? Remember the first few transactions we done were loans.
Yeah.
So obviously the retail bonds, the way the retail bonds would work is you would provide Ladbrokes maybe, or Premier Oil was one that done often issued retail bonds. You would provide them a £10,000 ticket, or they're raising, I don't know, let's say 100 million, and then they would provide you effectively a bond, right? They'll do that for a bond, and you would buy some of that bond, and effectively you would get, depending on how valuable that bond is, you would get a kind of an uptick in value. So if you bought at par, which is 100, which is kind of like basic, like, so every bond starts at par usually. Right, I don't want to go into the complexities of it, but usually starts at par 100, right?
Yeah, I have another episode for that.
So if you buy at par, it might rise to 102, 103, 104, because it's very valuable, and it's very valuable because everyone wants in on this bond, because the coupon it's providing, the interest payments that it's providing, are highly likely. I mean, it's highly likely. I mean, they're highly likely to continue making those payments, right? If not, to increase it in the near future.
Okay.
So from bonds, you would make money off the value of it, the face of the bond,
yeah,
and off the interest payments that you were paid by maybe Premier Oil, Ladbrokes, whoever it is. But that put me in a position where I could get my money back. Whilst investing is more long term. Investing in the stock market, you're looking at, and bonds can be long term as well, but stock market, you're looking at 5 years, really.
Yeah, that's
right?
true. Okay.
Whilst with bonds, I was realizing that I was investing in these bonds, I was getting uptick in value, so it might go from 100 to 103, and then I would also sell maybe after 6 months of issuance, and then I'll get half of the annual coupon, which might have been 7%, 8%, right? So I was making pretty good money, and I was getting the money back pretty quickly. So I was already in the mindset of lending rather than investing, because it was what I was doing. And when the first few private loans that I done happened, remember, these weren't the kind of businesses that you would invest in. They were the businesses that you would more lend money to, and they could pay you back from their cash flow.
Right. Okay.
So I think I naturally just went down the lending route because it was what I was really doing. I did make a few investments. Yeah. It didn't work out very well. But I would say the lending did work well for me. So Lendoe naturally got into lending because of the fact that it was something that was working, and I knew how it worked, and I was successful at it. And you know what they say, right? If you're doing something and it's working, keep doing it. Yeah. So we continue to provide loans, and people continue to repay those loans. Yeah. And it just naturally kind of manifested that way. I think now much more the reason why we do loans as opposed to going out and raising equity, which we might do one day for founders, but the reason why we do loans is because a lot of the founders we back are they're not equity backable businesses.
Okay.
I mean, you could back them with equity, right? You could give them an investment, but these are businesses that they spit out cash flows quite regularly, and some of them are like family-led businesses. They're not planning on giving you any shares in their business.
Yeah, that's true.
All they want from you is they want to be able to buy more stock so they can sell more stock and make more money. Whilst I think the whole equity play is really for really ambitious founders that want to go to the moon and back, or to the moon and beyond. Okay. And whilst they're doing that, you can sell your share and make a lot of money from it. So I would say that's why.
That's interesting. Wow, that's interesting. I wanted to actually ask this: why do you think underestimated founders struggle to get access to funding?
It's a good question, and a lot of these. I mean, I've got my theory. Yeah. But I think it's a few things. One is financial education. Yeah. So it's really good you're doing this podcast.
Yeah. Yes.
It's really
exactly.
Good
Exactly. I'm trying to bridge that gap, man.
I think a lot of founders, now that I'm in the position I'm in and I see people's P&Ls, balance sheets regularly, a lot of founders don't realize what's required in order to be seen as a safe bet by the banks, right? And remember, lending is very different to equity in the sense that if you give out 10 loans, right, you can only have probably half of one go bad.
Yes.
Because the amount you're going to make in return is capped based on the interest you're charging. Yeah. But the amount you can lose is everything.
Yeah, that's true.
Whilst equity, if you write 10 checks, 10 angel investment checks, and 10 of them, and 9 of them go bad, but one does an Uber. Yeah. You've made all your money back plus more.
That's true.
And I think what a lot of founders don't realize about raising credit or raising kind of taking out a loan or raising debt, shall I say, is that's the way the bank's looking at it. They're not looking at it as this is a good opportunity. They're looking at it as they're not looking at it from an opportunistic perspective. They're looking at it from, I would say, a more realistic perspective, right? What can go wrong here? And how do I mitigate my downside rather than what can go right here? And how do I, forget about the downside and think the upside is so big that I don't have to worry about the downside. Does that make sense? And I think, that comes down to things like your balance sheet, how many assets you have, what the value is of your business, your cash flow conversion cycle. There's so many factors to consider. And I don't think there's been enough financial education that breaks that jargon down to founders from underestimated communities. Often the communities that we serve. And it's one of the things that we, Lendoe we want to do. And it's part of the reason why we still do events. People are like, why are you doing events? But we realize like events play a big role in the customer we're serving to understand what they're getting themselves into.
That education thing is so deep. Like, I mean, even like I was very happy when you said that you started investing in stocks. I'm like, wow, thank God, another person. Like, there's not that many people that are interested in it or even interested in investing generally. So when you mentioned that, I was like, but like, you're right. I think the education thing is such a big piece people don't realize. When you don't have that knowledge, it's a big piece.
And you know what? It's funny, right? Because there's other reasons why a lot of underestimated founders don't access capital, particularly kind of debt capital. And a lot of them derive off that education piece. So because, for example, maybe you're not financially educated or you don't understand how the UK system works, you're now scared of credit. So you don't even go next to it. You don't try to use it from a young age. You don't try to kind of get involved with it at all. And then by the time you start your business and you need credit, you're realizing that, hold on a minute, I don't even have a credit score. I don't have any credit. And this is why our market has gone from, predominantly those that are black and ethnic minority to those now that have thin credit files. So we're looking at a much bigger market now because we understand that actually people from Eastern Europe are also a big market and a lot of them have thin credit files. We have a client that came from Russia, but long and short, he came from Russia. I don't know what happened. And he was an established businessman out in Russia doing really well. But when he came to the UK, obviously he had a thin credit file. He didn't have any credit. And the banks would see the money in his account. So they'll offer him a personal loan, but they wouldn't offer him a business loan.
Right.
And he ended up coming to us to take out some financing. I mean, his business is now doing amazingly well. He's doing like, going to be close to 8 figures soon, right? On an annual basis, just bought his house.
That's insane.
He's living a really good life now. But when he first started, you could see he was a great entrepreneur. You could see from his history of what he had done in other countries, he was doing great. And even with the business he had in the UK, by that time, for its first year, it was doing good. But no one was willing to give him credit. But what he didn't know is how he could go about building his credit score. So there's so many people like that, and those are the people that we're trying to serve.
Insane, isn't it?
It's insane, right? And what happens is you just end up getting told no so many times that it leads to the third problem, which is you just end up fearing rejection. And you don't want to hear no. So you just stop. So a lot of our customers actually, when we ended up building a relationship with Equifax and pulling credit scores before we started providing people capital back in 2018, 19, a lot of our customers actually had good credit scores. Because what happens is Equifax give you a sheet, right? That tells you it basically gives you like a ratio of if someone has this credit score, then in your portfolio you should have 20 of them, and maybe 2 will default, and it kind of gives you also a rating of good, bad, very severe, and so on. And a lot of them were good. A lot of them were were good, and some of them didn't even know that they were good. A lot of them didn't have any credit at all. A lot of them weren't on legal, they weren't registered on Legal Deed Poll, so they couldn't get credit. So there's all these factors that we started seeing, and I guess we started seeing it because we was on the inside looking out rather than being on the outside looking in.
Okay. Wow. So, That's incredible. I mean, I've got here a note here that you've issued 5 million funding, right? Probably more than that now.
Yeah.
So, SliderCuts, Mixtape Madness, Jollof Box, Vamp, Ava Estelle, SoulCap, Plant Made, and more. I guess what was it about these businesses that you was like, you got to help them to raise finance?
it's different things for different businesses, right? So I think when I think about SliderCuts, Sliders know me since I was like 11.
Okay. So you had a good relationship.
So I had a good relationship with Slider, and it's interesting because, as you know, Slider was one of the first. SliderCuts, the business, was one of the first businesses that we was able to write a debt check to, and later on we got one of them larger fundraisers for him that were through like kind of our platform matchmaking service. But one thing about Slider was that Slider was very, obviously I'd known him for so long, right? And I knew Slider was always very focused on what he was on his craft, and that if we didn't write the check for Slider, someone else would have written it eventually. He would have got there some way, some shape, some form. He was not giving up. But what I liked most importantly was that he was willing to put his own skin in the game.
Yeah.
And that's what it was about Slider. He put his own skin in the game first, and then said, "Look, I've done this. What can you? What can you do to support me to get to the finish line?" And I think that's super important. I think founders need to realize that a lot more, whether it's equity, whether it's debt. What skin are you putting in the game?
Yeah.
What how are you committing yourself? And when I think about people like Ava Estelle, he's someone that I met quite recently, and we've been fundraising for him quite recently. But he was, again, someone who I could see he was like a Slider. He was relentless. He wasn't going to stop till he got there. And I think when you've got someone with that mentality, that attitude, it's quite easy to raise capital for them or with them, because anything you need them to do in order to position themselves, they're going to get it done. When I think about Amat Plantmade, I remember she put out a tweet. It was quite interesting, saying that, she's been thinking a lot about scaling her business, and she might, she was thinking about getting a credit line, and I think now's the time. Hit me up if you want to work with us. And good friend of mine put us through, and when she told me her story, I was just like, yeah, this is crazy. Like, she had ended up scaling a bit, not scaling, but she ended up growing her business into the millions with no outside capital.
That's wild.
And the question for me was, imagine she was empowered with the access to credit she needs to not have to wait on her making profits or her making income from her existing products to then reinvest. Like, imagine if she can scale to or if she can grow to millions in 2-3 years, imagine what she could do with access to capital in 2 to 3 years. And one big thing for me is, I'm always about, even though credit is lending is a very traditional, rigid, structured way of taking out or taking out financing, in the sense that there's a set process. It isn't very exotic or creative. I'm always interested in working with people that are very creative and visionary, because I get them. Right? I get them. They might be just selling creams, or they might be just cutting hair, or they might be just doing something, selling swim caps, but they're doing it in a different way, in a creative way, in a unique way. And I see that as the future. And you want to be with whoever you see in the as the future. So that's why I worked with a lot of those founders. And also, is if you apply, we're going to come back to you and give you a response. And if you're a good business, we're probably going to work with you.
Yeah. I noticed because I went onto the website that if I wanted to apply, I'm not me, but if a business wanted to apply, it's setting up a call with you, right? And that's, I guess, you're doing some sort of analysis with those businesses.
The cool thing is really funny, right? Because we often get told, like, why are you still on the phone? You should just be all tech. But we understand that the community we're serving, they appreciate someone just hearing their story.
I like that,
and hearing their not problems, but hearing like why maybe they can't go to a bank, or why they don't want to go to a bank, and hearing how they got set up. And also, I think for the team, so for the Lendoe team, it was one thing that really, I've been doing this for a while. One thing that powered me on to continue doing it, despite the obstacles, the ups and downs, is the stories that I hear. The people that I get to work with. And their stories, similar to like what you were talking about in regards to the podcast. People want to listen for the stories. And it's what gives me the fire in my belly to work with them and say, you know what, this I wake up in the morning happy because I know that I'm involved in this person's story. And I want to make sure that the team also got that feeling, because I think it's one of the things that make them realize that, whoa, like, this access to finance thing is a big problem. But once they do their first deal, and like, whoa, this guy now has X amount of million or X amount of 100,000. Now he's doing all of these things. I played a role in making that possible. And I think it's important that the team that I work with, my team, have that same feeling that I have when I wake up in the morning in regards to like we're going out there to change the way things happen.
Yeah, that makes sense. What would you say are the benefits of going with Lendoe versus, you know, down the traditional route of a bank or seeking like angel investment?
Really good question. I think the traditional route of a bank. So I'll split them into two, right? The traditional route of a bank, they're going to take you through a very long-winded, rigid process that you're probably going to end up like saying, you know what, this is long. One thing with Lendoe, what we're going to do is we're going to try and expedite that process, make it happen super fast. And we're going to bring you not only the financial education you need to make the right decision in regards to what products you go for or what kind of facility you go for, but we're also going to bring you our expertise in regards to looking at syndications. So, you know, the modern day business or the business of today, like the business that we were serving in 2018, it's very different to the business we're serving post-COVID. Yeah. Like one thing we like to say now is we're here for the COVID babies. Yeah. The businesses that were born in COVID, the Ava Estelles, the Amas, the ones that were born in COVID and have taken off because of, you know, whatever reason it might be, they've taken off. But because of they've taken off so fast, they're kind of ahead of their time. So they're doing revenues that they should be doing at 5 years old, at 2 years old, or 1 year old. Yeah. And banks don't like that. Banks don't like the unusual. Banks don't like the new business. Banks don't like things that are not vanilla. That's what they call it in the industry. It's a vanilla. You know, they don't like things that are exotic, that are different. They don't like a business that's doing, I don't know, say £1 million every month, but they haven't got a hefty balance sheet with loads of assets, which consist of property and machinery. But that's what the modern day business looks like. Yeah, it's a guy in his house that's had to move into his sitting room because his bedroom is now his storage, and he's selling like 1 million caps from his bedroom or trainers from his bedroom. That's the modern day business. Love that though. And the banks don't like that stuff. And how we're different is we understand that that's the modern day business because we can relate to it. Yeah. And we understand that there are funders out there that are willing to provide you financing, but they need someone who can relay what you need in their language. Yeah. And that's what Lendoe was able to do. Yeah. And that's where these syndications come in, where we're not just taking out one funding package like a bank would do, or here's a term loan, here's an invoice finance facility. We're looking at solving all your problems, getting you a term loan for your project finance needs, which is basically when you've got a project you're working on, so you want a long-term loan, but also getting you an invoice finance facility to kind of manage your cash flow needs, because you know that because supply chains are messed up because of COVID, it's taking you 3 weeks to get things into the UK rather than 1 week or 3 months. And then also getting you a credit line, because we realize that actually you need the ability to dip in and out of credit, so you can kind of really push on marketing or press the button when something happens that you can take advantage of, right? Yeah. You know, there are all these factors that make us very different from a bank. So we're more of like I wouldn't say a non-banking finance provider, which is what they call people like Lendoe, but we're just different, right? So the benefits is that we're going to really kind of make sure we solve all your problems. Okay. And then in regards to seeking angel investment, I think it depends on the founder. Yeah. I think one of the benefits is that all the funding that we're providing you is non-dilutive. Okay. And I think what you're finding post-COVID and what you're finding more and more now with kind of where the VC markets are is a lot of founders are looking at different forms of capital, of alternative finance. They're realizing that, why am I going to continue to give away tons away of my equity when that's like the most expensive form of financing that I can take? Because what a lot of founders don't realize is that when you're taking out some non-dilutive funding like a credit line or revenue-based finance or a term loan, you're gonna pay that back from your cash flows, and you've already made that assessment, and you can see you can afford it. And once it's paid back, you don't have to talk to us. You don't have to talk to the person that's giving you the money. You're gonna come back most likely because you're gonna say, this is really cool. I can scale off the back of this. But when you've given someone like a piece of your business, you know, if you want to compare it on the APR perspective, like some like basically the returns that venture capitalist or that angel investor is gonna want, less so angel investor, more so VC is going to want, are astronomical, because they're not taking a fixed interest return or APR of 25% or 20% or 15% or 10%. They're taking a part of your business, which means that if your business grows 1,000 times or 1,000 X's, shall I say, their rate of return is called IRR, right?
Okay.
It's 1,000% as well. Do you see what I'm saying?
Wow.
So I think what's happening now, people are starting to wake up and realize that, hold on a minute, if I don't have the kind of business that can provide a VC that return and provide me what I need as well, then maybe I should be taking non-dilutive funding. So what you're seeing is, like I mentioned before, a lot of these new age business models, like last mile delivery for the restaurants, so dark kitchens, e-commerce businesses, they're realizing, a lot of them, that actually maybe I don't need VC. Maybe I just need a credit line. I understand how much my product costs me. I understand how much I sell it for. I understand how much I spend on marketing. I understand my cash flow conversion cycle, which is super key for any business.
Yeah.
I've got those 3-4 metrics. Let me use that, take a credit line, and let me assess how I can use that to grow my business. And it may not go to the moon, but I might get to the stars. But I'll still own the majority.
Yeah.
So I think that's probably one of the benefits when you're looking at taking kind of credit as opposed to equity.
Wow. Okay. Fantastic answer. Okay. What would you say are the cons of then getting debt then?
Okay, cool.
Yeah.
I think the cons, and this is really interesting, right?
Yeah.
The cons of business credit is it can be quite expensive.
Okay.
And when I say expensive, I don't mean it's expensive in comparison to equity. I'm talking about expensive in comparison to other forms of credit.
Okay.
So, we often have people apply with us and we're like, okay, we've got you a few options that you can go for. One is going to cost you 18% APR. The other is going to cost you 26% APR. They're like, 26% APR? That's expensive.
Yeah.
But you need to realize they're giving that credit to your business, not to you as a person.
Yeah, exactly.
Your business that's only been trading for 1 year.
Yeah.
That effectively is a legal entity in its own. And if it closed down tomorrow, they would have nowhere to get their money back from.
Yeah.
So when you compare business credit to personal credit, where you might get a car loan for like 7% APR. 10% APR. Yeah. It can seem quite expensive. But actually in reality, when I think about business credit, business credit is probably one of the most beneficial things that you can take out, unless you don't know what you're doing with it. Yeah. So I think a con is it can be a double-edged sword if you don't know what you're doing with it.
Okay.
And it can put you in a cycle where you're constantly having to rely on business credit and to keep your business going.
Yeah.
Right. And that happens with certain financial products that are out there.
Yeah.
Which interestingly enough are being issued by VCs.
Yeah.
With the hopes to make a VC type return. An IRR on an annual basis of 50 to 100%.
Wow. But
that's another story for another day. But that is probably one of the cons. But when you look at most of the products, they're relatively okay. I mean, they might be charging like 25%, 20%, 15%. And this is sometimes the banks. I remember like getting a loan for someone from Barclays, who was just a family friend of mine that needed some money for her business. And Barclays were charging her like 25%. And that's not, the thing is, to me, that's not expensive because I see the whole market. But to her, she felt like, but Barclays give me a mortgage for 4% or 5%. So why are they giving me a business loan for 25%? Yeah. But what they realize is that with businesses, there's a lot more risk.
Yeah,
it's a lot more risk because remember in the UK, you can close down your limited business and walk away, and all of the liabilities that are on that limited business, all of a sudden, they just start scrambling because they can't come to you unless you've personally guaranteed the loan.
Okay.
So that could be a con around like kind of getting into the cycle of having to rely on it to grow your business, to run your business. But actually, in reality, when I think about it, business credit, like Jay-Z says it, business, like the reason why, certain people own America is because they have access to credit.
Yeah. So what are your future plans for Lendoe? Where are you trying to take the business?
It's a really good question. So, I mean, a lot happened in COVID, and that made us take a step back and look and say, what are we really doing here? Like not where's the opportunity, but from a perspective of what's our mission? Like, what mark do you want to leave on the world before we say Lendoe's capiche? It's done, right?
Yeah.
And what came to mind is we got to figure out how we're going to solve this problem. And it's one of the reasons why we went to like more of a marketplace model, because we realized that we can try and, lend ourselves. And we can do that and we can do it really well. But how big but how much impact can it create? How much impact can it create if it's just us and a few LPs or limited partners behind us? But how big can it be if it's everyone? if it's we're partnering with marketing agencies, we're partnering with banks, we're partnering with alternative finance providers. If we create this ecosystem of partnerships, how big can it really be? How big can it really get? Can we solve this problem?
Yeah.
And we realized that when we looked at the size of the problem, so there was about 800,000 businesses that were birthed in COVID.
Wow.
Right. According to NatWest and CBI, if those businesses continue to grow and thrive, they'll add about 20 billion in GDP to the UK. There's about 1.2 million businesses across that diversity spectrum, from a Black, Asian, ethnic minority, or woman-led business. Or sometimes you could just be diverse by age. So you could be a younger, a relatively young entrepreneur. The average age of an entrepreneur in the UK, by the way, is about 54. If we can solve the access to finance problem for those two markets, which often tend to not be able to access credit as easily as their peers, then we've created some impact. And when we look at that and say, what's 1% of that 2.4 million or 2.2 million businesses? That's 20,000 businesses.
Wow.
So over the next 3 years, our aim is, can we take 1% and actually provide 1% of that market
You
credit?
are ambitious.
So it's a big goal, right? 20,000 businesses, right?
Wow.
Is that possible? I don't know, right? Can we impact them in some way, shape, or form?
Yeah.
I definitely think so. Can we provide all of them financing? I don't know, right?
Yeah.
But we've got our events. That's a way of making impact. We've got obviously our access to finance products. That's a way of making impact. Then we've also just got the relationships we have, right? Connecting people, which is another way of making impact. And the aim is, if we can touch 20,000 businesses and impact them in some way, shape, or form, and get them closer to access and financing, I think we've done our job. I mean, there's a bigger piece to it after that, but for the Lendoe marketplace model, that's what we're looking at.
I'm looking forward to seeing how you.
Yeah. Same. I'm still trying to figure it out.
And that is the beauty of entrepreneurship. I was actually going to ask you, because you've done well. You raised so much money for these businesses that are thriving. I guess, what would you say are the habits that have led you to that you developed? Because you're talking about coming from an environment where it's a bit different to where you are now.
Yeah, definitely not taking no as an answer. I'll definitely say that. I'm very resilient. I would say people that know me and know the Lendoe journey of what we've been through will realize that this guy is not going to stop. So that's definitely one of the habits. Thinking outside the box.
Yeah.
So not looking at things from a perspective of this can't be done. This hasn't been done.
Yeah.
So how can we potentially do it now? On the basis that it hasn't been done already, how do we go about doing it?
Yeah.
I think having faith, like constantly having faith in that which I believe I'm meant to be doing, is something that's helped me get to help me achieve what I would say or helped Lendoe achieve what we've achieved till date. Because I think, there's look, a lot of that 5 million you're talking about has been done over the past 8 months.
Wow.
If not.
So you scaled rapidly. Wow.
And that's because we realized after 2021, we came out of COVID, that at the time we were doing like quite small loans. So you're talking about like loans that were about maybe 50,000, 100,000. I think 100,000 was our average size loan. But we see like, why not bigger? I mean, we've got a number in our head. We don't talk about the number because I think what's more important is the impact in regards to the businesses. So we've got amount number of how much capital we want to go through the platform.
Yeah.
But we've also got a number in regards to how many entrepreneurs we want to touch. How many entrepreneurs we touch is more important than the number, but the number is big.
Yeah.
And in order for us to get to that number, we got to think bigger. We got to do bigger. So some of our fundraisers now are like, when I'm looking at some of the syndications, you're looking at like 1.5 million.
Wow.
You're looking at like, those are the kind of fundraisers. I look at the deals we're working on right now. I'm talking about deals that are, probably ranging from 500 to 2 million a pop. In some cases, 3 million. And you're looking at,
that's insane.
Raising funding for particular entrepreneurs across that kind of capital structure, from senior secured debt, which is like typical bank financing for a mortgage, to mezzanine financing, which is like that piece in between equity and debt. So we're thinking big, and I think the way in which I've been able to think that way, and the way in which we've been able to do so much over the past eight months is because the belief that, we're going to get to that, we're going to get to those numbers.
Yeah.
But we've just got to change what we're doing in order to help us get there faster.
Yeah. Okay. Wow.
Yeah. So I say those are some of the habits.
I'm looking forward to seeing how this turns out. What would you say are some of like the challenges that you've had as an entrepreneur on the flip side?
Really good question. I think just sometimes staying consistent in the sense of like, not that I'm not a consistent person, but some days you wake up and you're just like, this is a lot. This is a lot. And that energy that you might have had yesterday, you just don't have.
Yeah.
And I think what you really need, and don't get me wrong, right? Because I saw this picture, I can't remember who posted on LinkedIn, of being consistent isn't about being at your 100% every day. It's about showing up every day. But at the same time, I feel like when you're kind of 100% one day, 40% the next, 30% the next, 80% the next, it makes the journey longer. And I think it doesn't necessarily make the journey longer from a time perspective, but it makes you feel like it's longer because you have those really hard days, right? And those hard days take a long time to get through, right? Whilst the good days, they happen quick.
Yeah.
But I think, so I think that's the challenge, like that, having that same zeal every day can be a challenge, and figuring out how you get that. I think, so building a team has been one of the challenges for me. And I think building a team was a challenge. Well, I think it was more of a challenge previously than it is now. But that was because before I was Lendoe and Lendoe was me, such that I treated it like a baby, and I was very protective of it. And if you wasn't there when it was crying in its nappies, pooing, and I was having to do its nappies, and you was trying to come when it was playing football and scoring goals, and saying its first, making its parents proud, I was a bit like, are you really here for the long run? Are you really here to see this baby grow and become what it could potentially be? And I realize now that was more of a thing of trust and fear of losing maybe what you had built.
Yeah.
But as you grow as an entrepreneur, you realize that actually, look, if you compare it to a baby, compare a business to a baby, it takes a village to raise a child.
Yeah.
And it takes a lot of people to build a business.
Yeah.
It takes a lot of people, a lot of good people as well. So over time, you begin to learn that actually even if I'm scared about trusting people because of things that may have happened in the past, I have to trust someone.
Yeah.
I haven't got a choice.
Yeah.
Because if not, this baby may not grow.
Exactly. It's important, right?
Yeah, it's very important. So I think building a team, kind of getting through that's been challenging. I think now more so, and I think this is an issue for like every entrepreneur, like prioritizing. I think the bigger the business, like the thing about businesses, right, is they're like children. They're always kind of taking from you, right, constantly, and that could be your time, that could be your resources, could be your whatever, right. But then, as it grows, there's always another issue. Like it's kind of like when you're young, the issue is you want to play, you want to play out at night all the time, or you want to do something with your friends and your mum don't want you to. But as you grow older, the problem is it's now girls. You've always got girls in the house. There's always an issue with your business, right? That you've got to be able to fix as a parent, right? Or your baby, shall I call it, right? And I think prioritizing which problem to fix first, it can be quite challenging. But I remember one of my mentors just mentioned to me, it's interesting actually, because I don't know if you've read Stephen Covey's 7 Habits.
No. It's on. I've got it in my library.
It's really good. It's really good. It's like this matrix that he talks about in habit 3 and 4, I believe, and it speaks about kind of putting things into important and urgent, important not urgent, not urgent, important. Is it? I can't remember. But anyway, long or short, you basically put your based on importance and urgency, you put different things in boxes. But then what you're really trying to get to is you're trying to build a structure in your life, in your business, and whatever it may be, in such a way that everything you're focusing on is an important, not urgent. So it's strategic, and you've got other people handling the urgent matters, which are often the problems that you're trying to prioritize. So I'm learning. So even though it's been a challenge for me, I'm learning that it's a challenge for me because that's not where I'm meant to be focusing my time. Because there are people out there who, which I guess goes back to building a team, they're professionals at managing these priorities and solving these problems, and they can do it a lot quicker than you.
Yeah.
But I think, prioritizing what problem to fix first has been a challenge.
I love that.
Yeah.
Wow. I love that.
Yeah.
That's my takeaway. You know what? It's crazy because when I do think of things, I try to also, like you said, you got a long bucket list of stuff. And now I'm just thinking, okay, what is the focus? What's making this podcast tick, right?
Yeah.
The guests. Okay, that's the number one.
Yeah,
everything else.
Relationships, right? And
right?
you know what, right?
Exactly.
I think in business, what I'm beginning to learn more and more every day is that relationships are everything.
Yeah, it's important.
Relationships are key. Like you can create processes for days, but if you haven't got a team that you got relationships with to execute those processes, you've got no business.
Exactly.
You know, if you haven't got relationships with your customers, you've got no business. You know, relationships are everything. And actually, when you get the time to read 7 Habits of Effective People, you enjoy it because it speaks about relationships and it speaks about what is it, what is what is it that I'm planning, like how do I plan my day?
Yeah.
And it talks about actually that to-do lists are a way of planning in the past.
Yeah.
If you want to plan in the modern day, you got to think about it from 4th generational planning, which is not to-do lists. It's more about, that quadrant of important, urgent, not urgent, important, not important, urgent, not important. And then thinking about all the things that are in that far right-hand corner, which is, this might be my biggest guest that I'm going to interview this year. How am I working on that throughout this week?
Yeah.
How am I working on that? What am I doing? It's not urgent, but it's very important.
Yeah.
How is that embedded in my week? Is it a quick phone call?
Yeah.
Is it a text?
Yeah.
But it's something that I've just planned. And I'm not expecting to get the result today, but as I continue putting in my diary, before you know it, by the time it becomes something that's urgent that you need that guest, you can get that guest because you've been putting in the work.
It's important. It's super important. And actually, talking about plan, you've been planning your next event, which is coming out on the 22nd of June for a while. Can you talk to us about it?
Yeah, so the update, which is like you mentioned, happening on the 22nd of June, but it's really all about what have we been doing over the past 18 months. So in 2021, we had an event called Build Black Better in partnership with Extend Ventures at the UK Black Business Show. And this was just coming out of COVID and us realizing, unfortunately, the death of George Floyd had such an impact or had highlighted the issues, both systemic and not systemic, shall I say, that had affected the Black community. And I read it. I literally wrote a letter to Black businesses and us and our compadres, shall I say, people that want to support Black businesses. And I was saying, look, we've got to come together as a community. We've got to do something about this access to finance problem, particularly for Black businesses, because we've seen with the death of George Floyd, it's highlighted all the other systemic issues, particularly around access to finance that we're facing as a community. How do we do it? And after that, there was meant to be a part 2 to that letter, but it just never came out. Right. And I realized it never came out because I literally just had my head down and we was just working. And I feel like I owe it to the masses to give them an update as to what's happened since then. Yeah. Not only what's happened in regards to how we've been solving the access to finance problem, but what's happened to Lendoe generally. What's happened to the team? How have we changed things? We're doing. Who are the people that we've been working with? How have we gone from doing? How did we go from doing £100,000 loans to doing £1.5 million loans? And then what's happening next? And I think that's really what the update is. No, I think I hate when I say I think. I know. Right? That's really what the update is about. So the update is to update the masses, to tell them to give them the update.
Yeah.
To give them the update. Yeah.
Amazing. So get your tickets, people.
Yeah.
I'm going to make sure that this episode is released in good time so that people can get
tickets.
I'm going to be there anyway. So
when
I saw it, I was like, I'm definitely going to be there.
It's for people that like yourself, right? That see when you kind of, like you said, mention guests as everything to you, right? So us customers are everything, but not just the customers that we provide funding to. We see our funding partners as our customers as well. Yeah. Because the people that we take finance from to give to these different businesses, we probably work more with them than we work with only one business. Okay. We might do 100 facilities with them, and do 10 loans in one business. So I mean, so they're our customers as well.
Yeah.
But then also our partners, people that refer people, maybe people like yourself that are going to meet people. You're also customers. When I think about that stakeholder quadrant, you're also customers in the sense that you're a stakeholder to the business, and it's all about getting all the stakeholders in one place and telling them not only what we've done, like I mentioned, but letting them see the vision, but also see one another. Yeah, because it's always been like us in the middle. Get this from there, but no one really knows how we put all the pieces of the pie together.
I'm looking forward to it.
It's gonna be dope. It's gonna be dope.
So where can people find you?
I don't want to be found. I'm joking.
As a person that ever answer it that way, man, I love it. I love when people answer things in a different way, man.
I'm joking. But so I mean, like LinkedIn, Instagram. Yeah. I'm not on Twitter as much recently, I need to get back on Twitter.
I read, but I don't post.
Yeah. I just take it in. Yeah. Instagram, LinkedIn. Not on Facebook, not on Twitter very much, but you can probably message me on Twitter. I'm often speaking at events. Those are places you can find me. Or just go onto the www.lendoe.com.
It'll be the link. Details will be in the description as well.
But in regards to finding tickets, jump onto the Lendoe Instagram, grab your tickets. It's going to be great. We're going to have an entrepreneur panel, which is going to be full of entrepreneurs, all doing, I'm talking about 7 figures. Wow. Most of them are COVID babies, so were born in COVID, so they started doing that over the past 2 to 3 years. And they're going to be talking about how they done it. Okay. Then we're going to have finance providers that we worked with over the past 18 months talking about why they decided to not kind of effectively copy or replicate what the banks are doing and still serve this market. Then we're going to have a fireside chat with a very special guest who is a underestimated entrepreneur by community that he comes from, but has a business that is international. When I say international, I'm talking about UK, America. Wow. Like it's a business that everyone will know. It's a big like product-based business. Okay. And he's gonna be talking about his journey and what it meant, for him starting to be underestimated and how he got through that. And he's gonna be interviewed by someone who is very well. Like, it's gonna be big. Okay. It's gonna be big. The update is happening. Okay.
Wow. That's incredible.
Yeah. Limited.
Thank you so much, man. It's been an amazing conversation. Good. Like I feel like we definitely have to do a part 2. We're gonna have to do an update. An update. It's been great, and I definitely want to do another one. What's your final words for the audience?
I don't have any final words.
I think the
final words are gonna be at the update, so you gotta come to the update. I'm gonna give him the update. So that's that. The final words are gonna be at the update in regards to like, this is what I'm saying for the year, for the next 2 years. Come through, hear what we have to say. But if I have to leave you with something today, it's just keep pushing. Yeah. Keep pushing. Entrepreneurship, business is very spiritual, because you literally create things with your mind, and that's spiritual in itself. Yeah. And if you rely on what you see to determine the actions and decisions you make, you're likely to give up. Because what you see is never really, what you see physically isn't what's happening, it's what's happening here. Does that make sense?
Yeah. Wow.
So I think deep. I think people need to, because a lot of people ask me, how do you continue doing this? And so just keep pushing, because it's all here. Yeah. Don't let people, like, you have bad times, you'll have good times, but that's life. Yeah. Because it's like this. But if you've got the vision here, and you keep pushing towards that vision, it will manifest itself in weird ways. It will come to pass in weird ways, and you'll thank yourself for not stopping.
That's a lot more than nothing.
Yeah, I know it. It's a lot.
I love that. No, it's been great having this conversation with you, Demi. Like I said, like I feel like your story is like one of grit, like you say, and again it goes to my theory of, I feel like no matter like what scenario you're in, I feel like you can make things happen if you have a certain mentality. Do you know what I mean? I feel like what you're doing now is your calling. I mean, the steps led to it. Do you know what I mean? So it's been great having this conversation with you today. Listeners, watchers, I hope that you've enjoyed this episode of Take for Experience, and we'll see you next week.